Yo, what's up guys, how you doing? Welcome to my channel once again. So in this video I'm going to be talking about the strategies I use for my analysis and for trading my profit account. Now, but before I get into that, I'm going to talk briefly about some problems that are keeping some of you back. Now, some people, they look at themselves and they're observing what the problem, they're thinking to themselves, why are they still losing, why are they still unprofitable after several accounts, and after blowing several accounts, why are they still unprofitable? Some of you, the reason why you're not profitable is because of these reasons. Number one is impatience. Some of you that are too quick to trade, you're impatient, you're always looking at the chart most of the time, looking for setups, and if you don't see setups, you're looking at other pairs because you're impatient for your pairs to give you setup. So if you're impatient for your pairs to give you setup, then it's a very big red flag that you're not going to be profitable. So I want you to be very careful about that. You don't have to be impatient. That's how the market is. Sometimes you might not even see a setup in a week, sometimes you might not see a setup in a day. So don't be too impatient, otherwise you're not going to get profitable, guys. You're going to keep on blowing your accounts. You want to make sure that you stick with what your favorite pairs. Don't go and be enticed by other pairs. Don't go because you're a G or EU trader, you start looking for analysis or some opportunities in gold or USD JPY or other pairs. That's a very huge red flag. So you have to be very careful that you avoid being impatient. Alright, so the remedy I talked about is forget about yesterday's loss. Relax and meditate. So you want to make sure that you forget about the losses. Don't bring your past losses into the new week. It's going to ruin the new week. Alright, so the next reason why some of you are not profitable is because you have bad risk management. So for the advice I generally give traders is that you want to make sure you raise 0.5% per trade. You heard that right, 0.5%. You don't want to risk more than 0.5%. So guys, I don't risk more than 0.5% per trade. I risk $10 for my 2K account. I don't risk more than $10 in a trade. So that's it. So you want to make sure you're risking 0.5%. It's very important. Then the third one is analysis paralysis. Many of you analyze and it's killing you. You're always over analyzing the market. You're always analyzing every single hour, every single second, every single minute. It's stressful. It's going to add to a stress, and it's going to add to the tension and stress of the market. You want to make sure that you don't overanalyze. You reduce the time that you spend on the chart. So one of the ways to reduce that is by you want to make sure that you analyze at the end of the day. So before the new day, you want to make sure that you analyze at the end of the day at market close. That's when you analyze, so that's when you analyze for the new day ahead, or at the end of the week you analyze for the new week ahead. So that's how you do it. You don't make sure that you're not always on the charts every minute, every second. You're going to add to the tension. The fourth reason is bad/late entries. Now this is a very critical problem that is killing a lot of traders. Many of you don't look for good entries, or some of you entered late and it's killing you. It's very dangerous, guys. You want to make sure that your trades are sniper entries. That's part of my trade plan. Is the setup I see is not a quality setup, in the sense that the entry is not accurate or precise. I don't take that trade because it's not part of my trading plan. So that's it. So one of the ways you can minimize that is by using price alerts or pending orders. So it's going to help you to take precise, accurate entries. Now the first one is over trading or revenge trading. Now this is a very critical issue. So over trading or revenge trading is a very critical problem among a lot of traders. Many of you take a trade, you lose it, and you're angry. You go back and increase your lot size. You want to quickly cover the loss and make more profit, turn out to profit for the day. And by so doing, if the trade turn out to be a mess, a bad trade, you take a loss, and that loss is going to be a big loss because you increase your lot size. You don't stick with your lot size, you don't stick with your risk management, you overtrade, you revenge trade. So it's a very big problem. If you don't overcome that, guys, you're not going to become profitable. It's as simple as that. So you want to make sure you plan your trades properly, take good entries, take approach, use the right risk management approach, and you are satisfied with the outcome. You are satisfied with the outcome of the trade. Okay, so trading according to kilos and alerts. I've said that you want to trade according to kilos and alerts. The reason why you overtrade in the first place is because you took a loss. Now I'm not saying that you're not going to encounter losses, but if you're a pro trader, if you know what you're doing, your losses are going to be minimal because you want to make sure you're trading at key levels. Key levels are levels at the daily demand level or the daily 4-hour levels. when you trade at those levels, it increases the quality of the setup, it increases the accuracy, the precision of your trade setup, and you're going to incur less losses. But if you don't take those trades at those key levels, you're taking bad trades, you're taking lower probability setups, it's going to increase your losses and it's going to make you to revenge trade and to over trade. You understand? So that's very important. So yeah, I haven't learned that. Now let's go into the main video for today. That's the strategy I use in my trading journey. Alright, so this is the major strategy I use. I use a combination of patterns, Fibonacci and trend line. Yeah, it's very straightforward. Patterns. Now we all know that there are two things that are in the market. Either you are buying or you are selling. So if you are looking to buy, first of all you draw your key level. Now when you draw a key level at the daily time frame and the 4-hour time frame, you zoom into that level, going into the 5-minute time frame. What are you looking for? You want to look for chart patterns at that level. So if you're looking to buy, you're looking for 3 different chart patterns. The first one can be an inverse head and shoulder pattern. The second one can be a double top. The second one can be a double bottom, not double top, rather it's a double bottom. So this should be DB. Let me change that quick. Alright, so what are you looking for at that key level? You're looking for either an inverse head and shoulder, or you're looking for a double bottom, or you're looking for a triple bottom for buying strategies. Now for selling strategies or selling signals or selling setups, you're looking for head and shoulder pattern, you're looking for double top or triple top. It's just the inverse. There's nothing really special about these strategies. Alright, so guys, these are the strategies I use: patterns, Fibonacci and trend lines. Now for Fibonacci, I'm going to explain that later on in the video. Alright, so guys, this is the trading plan I use. I want to make sure I trade in a more precise and accurate way. So I'm trading highly precision entries and exits. It has to be highly precise, very precise. It's very possible to take precise trade. You have to make sure that your emphasis is on precision, guys. It's very possible to take precise trades with small stop loss and a very huge risk to reward. And also you don't want to risk more than 1% in a trade. So I like you taking 0.5 risk to reward because of I like taking 0.5 as my stop loss because of commissions. Commission usually increases it to something like 0.7 or that. So I don't usually use 1% because of commission. So I use $10 on my 2K account. That's at 0.5%. Now you want to take a trade, you want to make sure that the minimum risk to reward you're getting is a 1 to 3. Very important. Alright, so now let's go into the main video for today. Now let's go into MT5. Quickly, I'm going to go into MT5 right now. So what are you going to do now? Let's look at GBP USD. So what I do is that I like MT5 for my analysis because of this split chart feature. I can view 2 charts at the same time in different time zones, in different time frames rather. Alright, so guys, now what I say, the first step to do is to draw your key levels. Now how do I identify key levels? I use Fibonacci and I use support and resistance also. So now if you look at this is also support and resistance for the key level. It's also a key level at 23.6. So you can see that is a key level. So guys, basically I use these levels for my buying levels. I use 23.6, 30.9 and 38.2 for my buying key levels. You understand? Very important. 23.6, 30.9 and 38.2 for my buying key levels. Then I'm using 61.8, 70 and 85 for my selling key levels. So this is what I do. I come into the charts, I look at the daily time frame, I draw my key levels. I use green zones for my key levels and I use pink for my selling levels. Then after I draw those levels, I set alerts at those levels. So this is what I do quickly. I just okay, there's a mistake. So I'm gonna use a straight line. So after those levels, I set the alert. How do I set the alert? It's very simple. Also, you mark out the price. This is 132 316. Then you come over to this app. I use FBS app for my alert, for my setting my alert. Very simple. It's a free app. When you log into the app, Then you go over to GBP/USD. Then you come over here, you look at this icon, this clock icon, click on it, then you see the option to create a new alert. Click on that, then you set the price here. After you set the price, you click on set alert. So it's as simple as that. Now let's go back to our MT5. Alright, so guys, this is how you draw a key level. I use the Fibonacci, mark the swing high, swing low, then I set price alerts at those levels. So if price comes over to 20.6, now this level also aligns with support and resistance level, you can see. So it's a very strong confirmation key level. This is the, so you can say that it's a strong confirmation key level. So you can see that this is a support, this is a resistance. Now when price broke above it, it became a support. So in the future, price came back here and it acted that it was at the demand zone or a support level. So you can see that in confirmation with our 23.6 level is a strong confirmation and it's a strong level. So this increases our precision of the trade. So now when price comes over to that level, my alert is triggered and I'm notified. Now when I'm notified, what I do, I come into the 5-minute chart. I zoom into the 5-minute or the 15-minute. What am I looking for? I'm looking for my buying strategies or my buying patterns. Now when price come over here, this is the level. So I'm looking for either a double top, a double bottom rather, double bottom, triple bottom, or an inverse head and shoulder pattern or strategy, whichever way you want to call it. Now what happens here? Now when we look at this level, now price now what happened here, this is what this some people might call this a triple bottom. So some people might call this a triple bottom. So some people might call this a triple bottom, calling this the first bottom, second or third. But this is not equal bottoms. These are not equal. They are not on the same line. So to me this is an inverse head and shoulder. This is the head, inverse head. This is the left shoulder, this is the right shoulder. So you can see just an inverse of the head and shoulder pattern. Okay, so right. So what am I looking for? So for the double bottom strategy, I'm waiting for second bottom. So what do? Or if I'm using the inverse head and shoulder pattern, what am I looking for? I want to set my price I want to set my pending order at this level here. So I'll just set a pending order at this level here. So I'm going to set my pending order here. I'm going to use pending order. I'll set it here, buy. So this is the buy. Okay, I'm going to set it at this level. Now I'm going to set my stop loss below the head. I'm going to use $10 as my stop loss. I'm going to take a trade. So obviously market is closed, so trade cannot be executed. So this is just example of what you're going to do. It's very simple, guys. Okay, so guys, so that's what you're going to do. So when you come up, zoom into the 5 minutes, you zoom into the 15-minute chart, you're going to look carefully at those level. You're going to set your pending order at the level. So you want to set it, don't set it at the head, you want to set it just the level of the left shoulder. Like you see it here, the shoulder, you want to set it at this level, because sometimes price will not come back at that head. Like I said, it's not equal lows, it's an inverse head and shoulder, so price is going to come back here and start moving. So you want to set your pending order here. You understand? So that's also, guys, very simple. So whenever price come back here at that level, you want to wait, don't rush instantly to take the trade. You set your pending order so as to give you a more precise entry, then you set your stop loss below the head and you're good to go. So very simple. So now when you enter there, where do you take your profit, where do you close your trade? Very simple. What I'm going to do, you go into the 4 hour or 1 hour, then you look for your resistance, your 1 hour resistance, okay? Or sometimes you can also use the Fibonacci level to take your profits. So if you take your entry at the 23.6, you can take your profits at the 38.2 level. So this is the 38.2 level. You can close here, you can close here. So this is the 38.2 level. You can close here, then this is 30.9, this is 20.6, so you can close at this level 38.2, or you can mark out your resistance. This is a resistance here, so this is GBP. Let me change this to GBP USD. Let's go to the 1 hour here. So this is the resistance here, so you can also close here. So it's as simple as that. So why is this a resistance? It's a resistance because when price came to price started reversing aggressively, so you can see that it's a very strong resistance. So that's why it held, and price also came back at that resistance. So but the next time price broke above it, because price has built a strong momentum at this level, and that's why price broke above it the next time price encountered that level. Okay, so that's what I use. That's basically my trading setup. That's what I do. These are the strategies I use to take my trades. I set out draw my key levels. I set price alert, then I look for confirmation chart patterns. Then I set pending orders at that level, and I take my trade. So it's very simple. So if you can do this, you'll be very, very profitable in the market. So now there's something I want you to know. So for buying signals, buying strategies, it is more precise than selling, and I don't know how to explain that well. For selling strategies, it's kind of complicated than buying. Buying is straightforward, but for selling is a little bit complicated. There's usually a lot of manipulation at selling levels. I don't know why, but it happens a lot. I've noticed that. So that's why I like taking more of buying trades than selling trades. But I also sell. I'm not saying I don't sell, but I want to make sure that it's very, very precise. Otherwise, I don't take sell setups. You understand? So okay, so now okay, let's progress further. Now, if you come over to the daily demand, alright, so this is the daily time frame. Now, if you look at this 30 level, this is the green line here. Let's zoom back to the. So let's say you took this first trade in profits, you took another sell trade here, you're also in profits. You take your. Now, also you can see that there's a demand here. Now there's a demand here, so these are for 1 hour demand. So what I do is that I like use splitting my charts into two. That's why I like using MT5. I use the bottom chart for the daily time frame, then I use the top chart for the 1 hour or 4 hour to draw my key levels. Now on the 1 hour, you can see that we're looking at key levels here. So when price broke out of it here, you can see that this is a strong key level. Now why is this a key level? Why is this a key level? This is a key level because right, this is a resistance. Price broke out with this resistance, and this resistance in the future is going to be a support level. But when price came back to this level, let's say we set our price alert at this level and we get notified, but price didn't give us what we want and we waited. Now when we saw our price started reversing here, this is a sign that this is a strong support level. So what do? You don't enter right away. You wait. You set your pending order at this level. You understand? You want to set your pending order at this level. Why? Because this is a double bottom, right? This is a double bottom. This is not inverted and shoulder pattern. This is double bottom. So you buy here. You set your pending order here. Understand? So what do? You saw this. You draw the two demand level. The first one failed. The first one started rejecting here. You want to set your pending order here. So you come here, set your pending order here, then you set your stop loss here, just below the level. Understand? So you take that trade and you set your TP you can either set it here at this resistance, or if you are still observing price, then price came back all the way to the higher resistance. So whichever way you want to do, this is very, very strong setup and you're good to go. So this is very, very good. You can see that it's a very good setup. Your trades are precise and you're good to go. Now coming over into next week, what do I see for GU? Now when I'm looking into GU, what I'm looking at is now overall I'm not really certain of what GU is going to do, but overall I'm thinking that GU is still going to sell. And so I have my reasons for I have my reasons that GDC gonna sell over Russia, but for now I'm still undecided because I'm more of I don't predict. I'm not a prediction trader. I'm kind of a reaction trader. I don't believe in prediction. I believe in reaction. You understand? That's how I see my trading. There's a probability that price might reverse from this level. You understand? And start coming down all the way down. Understand? There's a probability that price can. That's how I do my trend line here. So there's a probability that price can also break out above this trend line and come over here and dump back here. You understand? So just ignore probabilities, but just make sure that your entries are precise and you're looking to trade at key levels. So this is basically what I do. So that's what I'm looking into. That's what I see in GPBSD for next week. So but what are you going? What I expected to do? So this is what if I were you, this is what I'm going to do. First thing first, I'm going to go into 1 hour. Now for the 1 hour, I'm looking at a support level here. Now why is this level a support level? Number one is the trend line level. And that trend line is on the what? Is on the 4 hour. This is the 4 hour level, 4 hour trend line level. So the probability that price might hit that level and start rejecting all the way down. So I'm looking to sell at this level, but I'm not going to sell right away at this level. Don't forget, I'm not going to sell right away at this level. I'm going to observe for either a double top or a triple top or an inverse head and shoulder at this level here before I start selling. And if I'm going to sell, it's just probably going to be a short sell. Understand? Price might come back here at this support and start going back up. Understand? Anything can happen. So like I said, there are two possibilities. Either price rejects at this level here and start dumping all the way down. So that price rejects at this level, start dumping all the way down, or price just goes up from here. Price just goes up from here all the way to here, then dumps down from here. So these are the two possibilities I'm looking into GBSC. Alright. So guys, that's all for today's video. So if you find this video helpful, I would like you to give this video a thumbs up and also subscribe to my channel. So in the next video, I'm going to dive deeply into more of Fibonacci. So I didn't really look into Fibonacci. I'm going to dive a lot into the next video. So okay, so quickly, this is how I set my Fibonacci. So come over to the edit button and you come over to the key levels here. So you edit it here. So this is 23.6 level, this 38.2 level, 0.382, this 50 level, 61.8 level, 30.9 level, 5 level, and 70 level. So when you do that, then you save, and this is your Fibonacci. Alright, so guys, bye bye. Until next time, I wish you a profitable week. Take care, guys. Don't forget to subscribe and don't forget to give the video a like. Bye bye.